So exciting trade on the live cattle futures today, but weren't able to hold those exciting gains. Do we have a topper or not? Let's cover some of the ideas real quick on what's driving this market. We've got a lot of things working. We've talked many times about this tight supply of beef available to the U.S. consumer. We've also got a couple exciting topics here. South Korean purchase of U.S. beef. Obviously, that's been exciting here for us in 2010 as these guys have further developments on their foot and mouth disease problems in the past few weeks. That's even gotten more exciting. The idea right now is latest update. They've culled 15% of their hog and cattle herd. Most of those numbers are out of the hog herd, but as far as exports, we're more excited on the beef side, though. So overall, we got this market driven up on hopes for further trade, further expansion of trade with South Korea for this year. At the same time, for this week, we've also got the Chinese president visiting here in the U.S. This is a beef story. As of right now, China has an official ban on most of our products for beef, and they've had this ban in place since 2004. We had BSE on Christmas Eve of 2003, so you guys take a look at. What you have seen by showing on this little pink shaded area here, this is the exports to mainland China. This is what they're talking about opening up. And as you can see, well, we weren't actually doing a whole lot there to begin with back in 2003. What the trade's been doing for a few years is going through the back door route, going through Hong Kong, which is officially a kind of more a freer export system here as far as that goes. So one thing I want to point out is even though we may get this expansion of trade with mainland China through this presidential visit, it doesn't exactly mean we're going to be going gangbusters with these exports here. Keep in mind, most of these numbers have been coming through Hong Kong right now. So I want to point that out here as well. So in terms of this news story, it is exciting. It's nice to hear. It's great to hear. But in the big picture, we probably are already sending them about the most of the beef we're going to get out of these guys here. So as far as the cattle goes, I want to point out we're still running into the highest, the tightest, the most exciting time frame of the entire season is coming up here. Usually the market peaks around March or April. So I'm not quite sure if we have a top in place yet. In terms of pricing, we're a little higher than we need to be as far as prices go from an economic standpoint, but from a market psychology standpoint, that's a different question. I still think we have maybe a couple extra weeks left in this market. As far as the hog side, I just want to point out one little chart here as far as the hogs. Watching sow slaughter rates. In other words, are these high corn prices making these guys bring in the breeding herd? And if this blue line, which is right here, representing the U.S. slaughter rate, moves over zero or a little higher than that, we're in contraction phase. What's interesting here is this is a 4-week moving average, kind of make it all smooth-looking lines. If we look at the latest number here, so the most recent week we have, it's actually showing up 14%. So perhaps we are finally seeing these guys be serious about reacting to this corn market here. So for the hogs, they should lag behind the beef in this market on the rally going up. But as long as we still have corn pushing new highs, I'm still not interested in selling hogs here just yet. So with that in mind, we still want to point out that the hogs, from a fundamental standpoint, it's good but not great. But as far as market psychology and following corn, I can't say we got a top in here just yet.